Do me a favor. Shut the fuck up.
Hey, Ryan, why don't you pull up Amazon's margins real quick?
Well, yeah, I'd have more of a grin on my face than Stephen Hawking on Epstein's Island.
I'm off as a smug cock when he said that.
Wow, fiscal philosophy, you're not very smart at all. You screw up, cash flow kings. Dissector, you are an idiot.
Hello, everybody. It is Saturday, and it happens to be Saturday at 8 p.m. Eastern. And at Saturday, 8 p.m. Eastern, you could be doing a wide range and variety of activities, let's just say, that aren't that accretive to your lifestyle. Now, what are some things, Fiscal, that you possibly could be doing at Saturday, 8 p.m. Eastern that, let's just say, you don't want to be doing?
Well, to make it a blast from the past, probably you could be doing a little something called robo-tripping.
Oh, whoa.
This is when you take an overdose of the over-the-counter Robitussin. Do not try this at home. And it gets to a certain point where it makes you hallucinate, apparently.
Oh.
Yeah.
Wow.
This is from the days of me being in high school, so this is like a 20-year-old trend.
Yeah.
I don't know. Hopefully it doesn't make a comeback and you're here instead.
Yeah. I was thinking you could be selling drugs to high schoolers. You're in your 20s and doing that. You're selling the cocaine, the devil's powder, you could say, to a bunch of high schoolers. Not good stuff. That's not accretive. You could be doing it on a scooter. You'd get that joke if you were watching the episode deep last few weeks. But yeah, those are some of the things you could be doing. You could also be shooting up a fentanyl crack pipe. That's always a good little mix in there. It's the 4th of July weekend, so why not add some fentanyl to it?
Thematically, you could like accidentally blow your fingers off with an M80 or something. You know?
Oh yeah. Have you ever seen the video of the guy in the wheelchair, Terry?
No.
You haven't seen it.
It's not ringing a bell, but it's possible.
All right, we're gonna start the show off with the Terry video because I think it's very appropriate.
Although somebody did set something off that was so explosive, it set off all the car alarms.
Oh wow, that's
this
Arizona for you, everybody.
It's a free for all here in Arizona. Yeah,
we'll start off the show with this because it's just too good not to mention.
Oh, 2 cars come. You got 2 cars coming 2 different ways. Here you go there. Bag up, Terry. Put it in reverse, Terry. Put it in reverse. Oh, Lord, Jesus. Oh, Lord. Oh, Jesus. What you doing, Terry? Terry, what
yeah.
Terry's just enjoying himself. Who would win in a race, Terry or Khmer?
It's difficult to say. I don't know. I don't know Khmer's top speed, and I don't know the specs of Terry's chair. So,
well said.
How much horsepower does it have? Who knows?
We do have Blake in the chat, Seymour Duck, Mike in the chat, the Kale also, who we're gonna have on sometime soon. Mike, by the way, Mike and Seymour, who are both channel members, and they would know that we have a 35-minute Disney deep or a Google and Disney deep dive, which is now available for channel members. You would have seen that last week, and there's no ads on it. We can't gouge you for any more money, so you might as well turn ads off on it.
Nope.
Yeah.
Oh, wow. We've got a lot of stocks on the list tonight. I'm looking at this list.
Yeah, you're looking at it. We got everything. We got a lot to cover tonight.
Yeah, I mean, granted, a lot of these are stocks I own, so
yeah,
it's exciting news.
So what do we start with? Is Tesla one of them?
No, I don't have any Tesla, and I don't own any ETFs, so I don't even indirectly own any Tesla.
What a joke! I technically am a Tesla shareholder then.
Yeah.
I think we start off with the topic of the title of the video, which is there an impending stock market crash? I feel like right now, Fiscal, there's too much winning, one could say. That was the title of last week's episode.
All right. So this is my gut. Like, it's not really based on much of anything, but you might remember the year-end show last year where we made our kind of 2025 predictions. And I said I thought the market would have a lot of ups and downs along the way, but by the end of the year, it really wouldn't have either crashed really, really super hard or pumped really, really super hard. So whether it's up or down from where it was at the beginning of the year, either way, I think it's going to end up relatively small potatoes in the grand scheme of things. But in between, we're going to have a lot of weeks where it's like, oh my gosh, this rally is great. And also others like the tariff tantrum we had earlier where it's like, oh my God, it's the end of the world. Stocks are going to zero, bro. And there's going to be maybe one more instance of that. There's just, with the bull in the China shop that we've got going on, so to speak, right now. I mean, I think there could be one more surprise here before the end of the year that might send stocks tumbling for a little bit until they then maybe we get the Santa Claus rally after,
already going a few months ahead.
I mean, I'm not particularly worried either way, though.
Yeah. are you building any cash right now? I know you're not much of a cash builder in the first place, but like, are you making more of
all
an
right.
effort?
In the famous falling knives cigar butt portfolio, I did take all my winnings on the 800 shares of TSSI I had in there, and so
Oh,
I've got like 20 something thousand in cash in there, just
said what?
sitting
Ready to put in an Uber.
And nah,
Jackson.
honestly, I wish Uber was still 60 so I could put a lot more in Uber, but I feel like it's getting pretty close to fairly valued. It might still have some room to go, but it's not so much of a pound the table steal at this price where I'm like, oh, better add all this extra into it.
What's it at now? Was it at like 90?
It's 92, 93,
Oh,
somewhere in
geez.
there, I think.
I thought it
Yeah.
was. Aria
Yeah.
told me it was crashing. I thought it was at like 80. Yeah.
I mean, I think it had a little dip recently where it went down to like 89 or something again, but then it came right back. Yeah.
That's. Yeah, I think
Uber's doing fine.
Oh yeah, Uber's fine. That was a very good pick, though. That was a
very good. And
shout out to Aria.
credit to everyone. I mean, Aria had a lot to say about it that helped understand some of the numbers around the freight business, which was my only apprehension with it. And some people on the Capital Mindset group were also at the same time saying it looked good at that price. And I had a lot of confirmation, basically, that Uber was good from a lot of people. So, and I was already in Grab, which is the same business model. So clearly I liked the business model already. So that was an easy enough thing to get my head around.
Was I with you? We were talking about how bullish we are on the whole, like in that whole industry, kind of.
Yeah. I think that's been a running theme this year, is that rideshare and the sort of being the middleman distributor of rides is probably pretty damn good. I don't know if any of these autonomous vehicle manufacturers are really going to be the big money makers everybody thinks they're going to be, but certainly if they put their offerings onto Uber's platform, Uber will make plenty of money from them.
Yeah. But I was told last week that Robotaxi would have Waymo out of business. That's what I was told.
I press X'd it out.
Yeah. Blake is not worried about a recession. As
No,
long as that scumbag Fabio doesn't ever get an Uber, I think we'll be fine.
So Blake's actually saying he's worried a little bit about a recession, but not a crash.
Oh. We're okay, good. Yeah.
Yeah.
I was explaining to my dad earlier today about the high tide, how if there's a mild recession in Canada, and yeah. Do they pay a dividend? What's the ex-dividend date?
The important questions.
Yeah. For those who don't get that joke, whenever I do talk invest with my dad, he likes to like talk up a big game, but he doesn't know anything. No offense. And I'm like, all right, look, I feel like a piece of shit saying that because he has vast more riches than me. But I'll talk him up about a company. And he's like, yeah. What's the ex-dividend date? It's like, oh, honestly, Jesus Christ.
Honestly, I do think though that just goes to show that just investing for a very long time is good enough, and you don't have to be an expert on individual stock picking to still do pretty well.
Yeah,
because clearly it is an old school mentality, I think, to like companies that pay dividends.
Yeah. Oh yeah.
Yeah.
It is a little alarming though whenever I do open up the brokerage account, because I am under the custodial account for like another 2 years, which I like to abuse that tax advantage. It's always funny because my portfolio is outperforming everybody else's. We have multiple like family accounts on there.
So you get to see what everybody else in your family is doing, and you're
I get to.
That's nice. That's a flex. Yeah. From what I know, for like my family doesn't necessarily gather around and talk about investments, but I know some family members have like retirement accounts and stuff, and they say that from what they say, I'm crushing all of them pretty hard right now. So it's a good feeling. some people at that I work with, I got one of them into BTI pretty early in the year, and he's done very well on that.
Yeah.
So I now am, I guess, like the expert in my peer group on this. One good pick, and everybody thinks you're a genius. So it's the Jeremy Lefebvre effect. You know, you get rich on Tesla, and all of a sudden you know everything.
Of course, yeah. I did perhaps give my one of my relatives. I'll be very vague. I'm not saying that I manage his portfolio, and I don't get anything for managing it. But we are around like the $20,000 in profit since I've started over the last couple of years. So like, it's a nice subtle flex. Yeah, he made me $20,000. Like, yeah.
I have. I mean, I've got a similar kind of arrangement going with family and stuff. Like
if 1% commission every quarter.
No, like
rip them off.
It's at the end of the day, like especially with my immediate family, like. None of my immediate family has like, I'm the youngest generation of my immediate family. So we're all pretty much like everybody's beneficiary on everything, if that makes sense, because it's literally just my parents and my sisters. So like I have them as like random beneficiaries on like my life insurance policies and stuff. I don't even know if my sister's aware that she's a beneficiary on one of my life insurance policies, but she is. She would get like close to $100K if I like randomly die in an accident. I don't think she knows that.
You got to put in the LLC name, so us and our mysterious person can nice piece of the pie.
But yeah, so suffice it to say, like we kind of just we tend to think of each other in that way and try to look out for each other and all that. So
yeah, family first.
The family that saves together stays together, or whatever. I don't know. Is that a saying
over here? Oh.
What we do is good growth stock mutual funds with our Smart Vestor Pro.
Yes, Ave Maria Mutual Funds. They are CAS.
You'll return 12% a year every year.
Yeah. There's a new poll up in the chat because this week I was on vacation pretty much the entire week, but there is the big beautiful bill was passed, and just the way that it's being described by a lot of people makes me not want to root for it. I just don't like the way that they describe it. It's a little creepy. But yeah. Oh no. I would be I will post the open invite link. As long as that scumbag Fabio doesn't come on, I guess maybe we'll. Yeah, we have no guests tonight. So
I do think. I mean, it probably will, in some regards, be good for some stocks because I think it gives doesn't it give a bunch of tax breaks to rich people and corporations?
That's
like, won't that make the market pump?
I genuinely couldn't tell you because I have not looked at it whatsoever, but like. I feel like that's kind of the narrative for like any Republican.
I mean, in my server, people are excited because apparently there's a bunch of money going to like a hospital or something, and so they think MPW is going to pump.
Okay. That's you gotta.
Yeah.
Good theories. I'm not a doomer, but the U.S. debt has me a little. Yeah, I was talking about this too with family. I'm like, I don't even think it's real at this point. Like I'm just not convinced that like we actually owe this money. We're never going to actually pay it.
No.
I know we actually have it, but like
we do. Like when the bonds mature, we basically refinance them with new bonds. That's one of the reasons why Trump is. I mean, or this is what I've heard from people that think. They're thinking about what the motivation could be behind him, like trying to pressure Powell into lowering rates, and you want as low a percentage of the revenue of the federal government going towards that interest bill as possible. But no, we're never going to completely pay off the debt. And if you've been paying attention to the weekly calls, Ryan, whoops.
Oh yeah, that's karma. The Oracle has interfered.
Yeah, the Oracle just pulled my phone out of my pocket. the whole basically the global banking and financial system completely relies on U.S. Treasuries to function. So our debt funds like everything in a way. So it would be actually kind of it would actually kind of be bad if we just paid off all of the debt.
I agree. We need more debt.
Yeah.
Dave Ramsey wouldn't like it, but it's
I know debt is like the tool of Satan or whatever.
Yes, it's true.
The borrower is slave to the lender, as they say. Or hey, what if China calls in our debt? Fucking retards. People who don't understand like that our debt is all in the form of bonds that have set maturities. It's kind of funny. Yeah.
Okay, so the whole tax breaks for the rich people. It's just the way it's described by like every Democrat. So I couldn't tell you if that's true.
So there is something. I actually. So Cody says you can't pay it off because the amount of money doesn't exist. Well, it does, because the debt is is one of the ways that new money is actually put into circulation. All of that money has been spent on something, so it stands to reason it is in circulation. Like, it doesn't exist in physical cash, but it does exist.
Yeah.
The money supply, yeah. I mean, it exists in some form somewhere, I would say.
Yeah. We need
Feel free to correct me if I'm wrong about that, but I don't see how you could issue all of those bonds, spend the money, and then it just doesn't exist.
It disappears. It disappears just like
because my understanding is that they that's one of the ways they basically generate it into existence.
Yeah.
Especially if like the Fed directly buys the bonds.
Yeah.
Because they just create a ledger entry and materialize the money out of nowhere.
Yeah, how do we feel about this? This just
happened. The America Party, how creative. He couldn't come up with a better name.
I feel like nobody trusts him now after that crash out. He called Trump a pedophile, which is not true.
It's actually really funny because he's bragged about going into the changing room of like the Miss Teen USA pageant. Like, these are like 15-year-old girls, and he has bragged about this publicly.
Good legs.
He's like, I could do it because I own the pageant. I can go inspect it. Hey, how you doing?
They have good legs.
They're in the changing room. I get to see all the girls. Like, he has said this, so it's kind of funny.
I was just watching
because now, like, granted, like, these are not like small children or anything, but like they are definitely underage.
Yeah, I was watching. You see the Osama bin Laden documentary on Netflix?
No, I haven't seen it.
Oh, it's very good. So now I've been watching the Trump clips of Abu Baghdadi is dead. He died like a dog.
Oh, that's one of
he
the
was
best.
Whimpering.
That's one of the best speeches of all time. I don't even care. It's goated. Die like a dog.
And since Gil is in the chat, we figured we would now summon in somebody who was quoted earlier this week to saying, I'm telling you, you should switch from Saturdays 8 p.m. Eastern. That's when the primetime action is. Welcome in, Fabio,
action is.
Who is now calling in at Saturday 8:20 p.m. Eastern.
I'm getting old though, so it's different.
I don't never too old for Club 11.
Aren't you like 10 years younger than me? I don't want to hear this getting old shit from you.
We're both. Oh no, well you've got like a resurgence of youth. You know, that's what the girls
TRT.
That's true. Yeah, I do anything I can to fight time and gravity. Those are the great enemies.
Yeah. I didn't know where the inside joke was coming, so that's from my friend Gil in the chat.
Friend. News to me.
We go way back, you know, Gil and I. But anyways, yeah, this whole bill, I was already kind of talking with Blake in there, and I guess, well, where do you guys want to talk about first? Because there's a lot of, I think, people are talking about it from their framework of politics.
Is it big and beautiful?
It's big. I don't know about beautiful, but it's big.
You know, it's funny. People talk about big beautiful women. Now we've got a big beautiful bill.
BBB,
Crazy.
BBW, BBB.
Big ball ball.
A BBW. So I mean, I prefer to think of it, try to think of it from the standpoint of what stands to benefit, and will it be anything in my portfolio, or will there be anything we could buy that's likely going to be a beneficiary of it that already isn't, where it already isn't priced in, basically.
I think just in general, most businesses will benefit tremendously from this. So a lot of the changes that were bad in the original Tax Cuts and Jobs Act that I studied in college, by the way, because that was a big change. That was a big deal, right? So right on the cusp of that change, basically it sucked for all the people right before, because they were studying under the old tax system and they took their tax class. And all of that had to be basically thrown out the window. At least now, for those who are studying tax now in school, you're basically, the criteria or the curriculum shouldn't change too much. It's just like making the previous Tax Cuts and Jobs Act permanent in most ways, and then some adjustments to like gambling, some adjustments to other things when we get down into the details. But when one of the bad things that was unfortunate was the removal of the ability to deduct R&D expenses and a lot of CapEx, and you couldn't do it all at once. You had to basically space it out over time. Now they brought that back where you could, under for R&D, it has to be qualified research and development. And a lot of that qualified part has to do with where it's spent. If it's spent in the US, it's going to be qualified, and you can deduct that, the total amount in the full year. And people don't understand that there's a difference between GAAP accounting and tax accounting. So when people figure that out for the first time, it breaks their minds, because they think that there's a reconciliation that has to be done between GAAP and tax. I know it's annoying, but yeah, when you look at your financial statements that you see on, like the 10Qs, et cetera, that's not the tax accounting, that's GAAP accounting. When you do tax accounting, you do later a reconciliation of the two, and you'll see like tax assets and tax liabilities that have to do exactly with that.
Oh yeah, this comes up a lot. In my thing where we discuss, because we've been discussing REIT status a lot in the past. You've probably seen some of it, and the whole argument comes from, like, if they're generating cash flow just because the GAAP net income is this or that, it doesn't necessarily mean they wouldn't have owed taxes, and so they still do have to pay some kind of a dividend to keep their REIT status if they would have had taxable income, which is different from what shows up on the GAAP accounting. But it's like very convoluted if you're not like an actual accountant, and so there's a lot of arguing that happens on my Discord about that with REITs. Yeah,
when people first figure that out, they're like, whoa. But after a while, you get used to it. And just like anything else, it's just like some fun fact that and you can tell someone else when they first find out. But so a lot of the stuff in this bill, I think, was actually really positive for businesses in general. There's a lot of misunderstandings about taxes from the get-go. So for example, I guess I should start with like one phenomena that people don't really know. It's the phenomena of observing the total potential taxation as a percentage of GDP. And it's really actually stuck in a range regardless of tax policy. So once someone realizes that, they begin to realize that taxation will never be the solution to the deficit. Funny enough, it won't. It can't be.
True.
I can bet you whatever you'd like that it won't be. In fact, the highest correlation to tax receipts is just economy, right? So how is GDP doing? GDP is the greatest predictor of tax receipts and or tax receipt growth, and the range tends to be stuck roughly. The exception to that, when you look at the average range for going back 100 years or so of when we were recording this data, was World War II, where we actually collected a fairly low percentage of GDP. But other than that, United States collects closer to between 15 and 21% is where it ranges out. And you can actually see this in the original Tax Cuts and Jobs Act. Tax receipts actually went up for the United States. The only tax cut that really happened to wealthy people in a major way, in a direct way, or high income earners, we should say, I'll be specific, is the increase in the SALT deduction. That's like the most broad one. So before it was limited to 10,000, which was actually a pretty sizable tax increase back in the original Tax Cuts and Jobs Act. A lot of people don't want to hear that because they're biased to one team, and they just like say one team is bad, and they have a preconceived notion about things that they do or things that they stand for. The very simplistic normie take is one party cuts taxes for the rich, the other one does not. I don't view that at all like that. It's very nuanced. And that was a big complaint for a while for wealthy individuals, or high income earners, I should say, high income earners to going forward. When I say wealthy, I'm really referring to high income earners. So I might make that accidental, call it like nomenclature, but I'm not referring to like, someone who has like billions of dollars just sitting around.
Right. The colloquial rich person, like the doctor or whatever,
Dividend
that makes a lot of money.
The investment banker in New York City. Yeah. So now they can get 40,000, and I think it increases by 1% up until 2030, and then it sunsets. So Congress will have to vote again if they're going to make it permanent or extend it or do something with it. So that's a deduction. But that's kind of nothing. The deduction, if going from 39 to 37.5, that's just like setting it in stone from the previous one. So it's not a further tax cut. And once more, when you actually look at tax receipts from percentage of the income, right? So who pays all the taxes? It is pretty much the rich.
Listen up, Khmer. We're talking about income.
Yeah, it pretty much is the rich. So like in any geography you look at, it's almost like a Pareto's distribution of like who's paying all the tax. It's fairly normal. And then also with consumption, it's the same thing. So it's in both.
20% of people are paying 80% of the taxes, essentially, something like that. Yeah, something like that.
I mean, it depends on your geography if you want to get specifics, but for the most part, this is the case.
I only said that in case there's people who don't know what a Pareto distribution is.
Yeah. And then the whole point of like, okay, this burden is being passed on to someone else. I don't know where that argument really comes from. Just because money's fungible and it flows like water through the system. Really the burden or the tax receipts, it's not suddenly like the lower income suddenly is going to pay more in tax just because someone else is paying less in tax, and then the volume base increases or the velocity of money increases, and the tax receipt increases. That's not, so you see, like you really have to do a lot of stretching and maybe some straw mans to start saying that, suddenly like lower income people suddenly pay into the system, which the bottom brackets don't pay anything into the system. They actually only just receive from the system. So
yeah, that is very true. Wasn't there a conversation about like what the federal poverty level is for different size families? It's like I think it was on Discord. There was a conversation about what the federal poverty level is income wise for different size families.
Oh, okay.
And it was like a family of, and I want to say it was like a family of four. They set it at like 32K. Yeah, those people aren't paying any tax because once you take the standard deduction and then you have like a couple dependents, like, it's zero.
Yeah. You're not paying anything.
Yeah.
Yeah. And like with anything else, no one's making the argument that they should, right? But, it's also acknowledging that just because, I don't know, some doctor you think is not paying more, that doesn't mean they're paying more, or vice versa. Like there's this cut to Medicaid that's $800 billion over 10 years, right? Yeah. So it's supposed to be spaced out. But if you're really being honest about it, that cut over 10 years is going to be dwarfed by the increases that are going to happen like next year. and every budget bill that will come after the fact. So the rationale, I get, what you could argue is like, they're damned if they do, damned if they don't, in the sense that the three parts where government can really actually make a difference in spending is going to be in Medicaid, Medicare, and Social Security. Is like part of taking the most of the budget. But then there's nuances, like there's a reason why we don't really go into the Social Security thing. So Medicaid is one of the ones that they can, because it's not something that you really pay into, because Medicare and Social Security, you pay into it. So it's really like
it's a separate, it's payroll taxes that fund that, not actually your marginal tax rate. Yeah,
exactly. And then in the case of like military spend's not so that one's difficult, because within that there's the procurement budget, the maintenance budget, and a bunch of other things that go into that.
Right.
And as a percentage of GDP, we've actually declined by quite a bit. So everyone forgets to take everything in terms of like relative sense, or like a relative value, and they just look at absolute value when they're making this debate. If you look at the relative size, which is actually what matters, that's been declining at a pretty steady rate for a while. And there's like this whole separate argument about whether or not adversaries are becoming more, let's say, noisy. And so should the United States start, upping that or not?
And it's difficult to, it's probably difficult to calculate, because of how complex everything is, how much value we gain from being able to, say, project power globally with the Nimitz class carriers and the F-35s and all of that, all the fun toys. The nuclear submarines, the most destructive thing. Trump had a really fun speech about the nuclear submarines and how
they're so fun.
More destruction than anybody has seen. Nobody's ever seen weapons this powerful before. Yeah. Which is probably true. I mean, those submarines are pretty remarkable. But yeah, that it costs a lot of money to be a couple decades ahead of the next closest rivals at all times, and maintain a substantial standing army and all of the equipment and everything else. So, but there is some value to that for sure.
Oh yeah,
and we're beneficiaries of it.
I'll say this, by the way, kind of a side note for anyone who's kind of maybe thinking the opposite. You can probably take this on a bet that over the next couple of years, the policies that you're seeing today, you'll observe this phenomena, because you'll look at the tax receipt data, and the tax receipt data is probably, as long as the economy grows, is going to go up and to the right. It's not going to go down from these perceived tax cuts. So yeah, that's a side note to add to the previous one.
What I've heard is that in either direction, when it comes to taxes, either raising them to a certain point or lowering them to a certain point, like there's like at some point on either end, you get sort of like a diminishing return of like the thing you're trying to do. Yeah. Mm-hmm. So if you think taxing is, like you were saying, if you think that that's the key to eliminating the deficit, well, at a certain point, there is a diminishing rate of return, because it lowers the velocity of money and the economic activity. But then, like on the lower end, eventually, if you cut taxes to the point where it's like 1%, then it's, even if you grow the economy a lot, it's still not going to be enough to actually pay for anything. And there is just like there's a sweet spot somewhere in the middle there.
Put all of our money in yield max funds. Do the Camaro method. It's gonna work.
And you guys made me happy when you guys quoted the weekly call on the whole debt thing. That was good, because everything you said was, that's exactly the case. People put a lot of weighting on the U.S. national debt as being an issue when it's not, and it's not some modern monetary theory bullshit, because that's bullshit, by the way. But it's much more deeper and profound than that. A lot of the bond guys, they understand this. And one guy who's actually done some good free content, you guys will know his name, Steve Eisman. He's actually talked about that for a while now, trying to stave off like this calmness about, it's more recently he's talked a little bit about it. And sometimes you'll get some guys out there who are, again, usually fixed income focused, because Steve Eisman's a stock guy who sometimes opines on, bonds and banks, et cetera. And he hasn't always held this opinion. I think he's learned over time. But the bond guys typically pretty spot on this. And the national debt, like you just said, it's a lot. The treasuries are water to the system. If banks are pipes, treasuries is the water. And it's not just American banks, it's global banks. And the US is the global reserve currency, regardless if it wants to or not. And there's this whole debate whether or not, like, the United States wants to keep having that role. But it's not that the US dollar can ever separate from that role. The US would probably have to create its new currency, and then the dollar would remain as like global currency, right? But the US dollar is so entrenched in the euro dollar system that there's not really a way to uproot it. And all the, BRICS things, bullshit. Everyone who comes out with the doomerism on the dollar, it's all bullshit. But that does mean that almost like the US has a responsibility in some sense to consistently supply liquidity to this monster. And that comes in the form of collateral. That collateral is required for those transactions. And if we move into a world where stablecoins become, the way in which non-bank entities transact, bank entities transact, that's going to push up demand for treasuries beyond you guys can understanding, beyond my understanding. Like, I don't know what that number ends up being, but we kind of all know that there probably isn't enough treasuries to supply that collateral. So,
yeah. A lot of the debt panic stuff comes with a lot of people who maybe grew up hearing Ron Paul give one too many speeches about how going off the gold standard was a huge mistake, and that the dollar is fake money.
Trump coin. What are you talking about?
Yeah. The problem with the gold standard, right, is just like it was good for the time, but the problem is it doesn't expand and contract with the demands of the system. So that's also an important aspect of currency, especially in the margins. Like, you want to be technically efficient. You want a currency that can expand and contract.
Yeah. And
you gotta think of like the US dollar as no longer being just the United States. So it needs to expand and contract almost to the globe, to global commerce. That's what people miss. It's not just the United States. And that's why when the United States sneezes, the world catches a cold.
Yeah. I mean, I believe it's one example is like Panama. They have Panamanian dollars, and they are just literally 1-to-1 pegged to the US dollar, sort of like a stablecoin almost. Mm-hmm. Yeah. So there's a lot of countries out there that are just like completely actually reliant on our money in a sense.
Yeah.
I'm sure there's others out there that have some other type of like they have a relationship that's similar.
Stabulo did have a concern about the big beautiful bill. Can we condense this into about 10 words? Now, obviously you can use a little more than 10, but with the big beautiful bill, what are some of the key, takeaways for the average investor like me and Dividend dude?
So increased tax cuts to people who have kids, permanent tax cuts on corporations that were before and the individuals, temporary tax deductions on interest paid on cars. There was also a provision that increased or enabled, I should say, the deduction of taxes. My cat's like, what are you doing? On R&D and CapEx, so purchase of equipment. That's really positive, by the way. There was also spending changes, so changes to spend in Medicaid, and also on border security, stuff like that. Those are the highlights. So.
Oh, and the no tax on tips, because they were harping that, I saw.
Well, it's not no tax on any and all tips. There's a limit.
Yeah.
And it phases out, but there's a limit, and it sunsets on top of that. So there's a lot of sunsetted stuff. Oh, and gambling. So gambling.
Oh yeah, Seymour, go the good.
Wait. What's the gambling thing? This is interesting to me. I didn't
So-
hear about this.
Before in the United States, so by the way, most Anglo-Saxon countries, and I said Anglo-Saxon countries in the Commonwealth because I don't know about India and some of the others, but in Australia and in the UK specifically, I'll say for those two for sure, you don't get taxed on gambling wins. So when you gamble and you win, no tax. You don't have to declare that. In the United States, we were different. We said you do have to declare that. You will get taxed on your gambling wins. And on top of that, if you lose money in gambling, you cannot deduct that. You can deduct $0. Now, the difference. Oh, but before, if you made money, let's say you made $10,000 in gambling, and then you lost $10,000 in gambling,
You still had to pay.
No, zero.
And I know. Well, also, I do think previously there was a carve out for people who play like because I know professional poker players had it so that they only paid tax on their profits somehow. So I think there was if gambling was like actually your full-time profession, you could take your losses, but it had to be your profession. And it but if you only gambled as a hobby, you couldn't take the losses.
Because I think you had to form yourself as like LLC or sole proprietorship or something like that. You pay tax like that,
yeah. Because I used to be into the poker, and I knew some professionals, and they only paid tax on their win. Because if they couldn't take their losses, they would never be able to do it professionally, because the margins are actually relatively small for most professional poker players.
Seymour's gonna correct me here because he's a gambling enthusiast, but if you're gambling like in person, is this only gambling like online, or like, I know obviously in person like they're a little more strict, like you have a player's card. If you're playing professionally, like you're gonna pay more in taxes. What if you have me who goes gambling maybe once or twice a year in a foreign country? What about those people? They aren't paying taxes, are they?
Well, you're not declaring that, are you?
So are you saying if an American plays in a foreign country?
Yeah.
No, let's say like perhaps somebody went to the Bahamas and won, I don't know, $300 blackjack.
Wait, did you
$300, nobody gives a crap. But
that's
depending
hard
on
money that could go towards
depending on depending on where you are, there's like I believe there is like a threshold.
Where
they're not going to give out a tax form to somebody that wins $100, for example. But the casino, if you win over, like, I think it's 15, or maybe now not, but it used to be if you cashed out over a certain amount in winnings, you had to fill out a tax form, and they would send it.
That's kind of what I figured.
Yeah.
But
so is that going away completely, where no matter how much you win at the casino, or like what's
now? It's just like if you win $10,000, or let's just keep it. Yeah, $10,000 is fine, or $100,000. You're a baller.
Yeah,
you win $100,000. So now, if you lose $100,000, you can only deduct $90,000 from that, and so you still have to tell the U.S. government that you won $10,000. You're only able to deduct 90% of the loss, up to 90% of the loss, and that 90% is calculated as your total winnings. So if you let's say won $100,000 and then you lost $50,000, to my understanding when I read through it, you're able to deduct that full amount, because your maximum of deduction is 90,000, right? Because how did I get that number? That's 90% of 100,000. So that's going to be your limit, right? So regardless of whatever happens after that, you have to report $10,000 in gains. If you won 100,000, assuming you don't play anymore. If you lose $50,000 on your next bet, you're able to deduct the 100% of that, because now you're at a profit of $50,000, but you're capped on deducting 90. Does that make sense?
Interesting.
So that's how, to my knowledge, when I read through it, that's going to be how it goes forward. And so
now is the time to play the World Series of Poker, is what I'm hearing.
Well, I think that really good professional poker players get hurt by this. And not so much the thrill junkie.
The casual amateur that entered one time for fun on vacation.
Or does it
That's
every
you.
other weekend for their favorite sports team and goes like, ah, shit, but whatever. Hey,
Because I've always wanted to go into like one of the 1K events or something in the World Series of Poker just for fun, like just to see what happens.
Have a CFK shirt on. Use it as
yeah. Do dividend stocks, not drugs.
I have a fun question. Moving away from boring topics like the big beautiful bill. You have you have $100,000 hit your bank account right now. Are you buying Dave or are you buying Jackson?
Trying to bring up stuff. Okay.
Yeah.
That's really tough, actually. Believe it or not. And okay.
So we're not allowed to split it between the two, huh?
This is the best question.
Yeah, exactly. Are we not allowed to split it between the two?
No.
Because the thing is, like, both carry different risks entirely. Like Jackson, at the end of the day, has like a blow up risk embedded in it, but I don't think it's going to happen to them. Just to be clear. And then you look at Dave, and you might be price anchored, and you're like, "Fuck," it's like it's gone up so much. I have to pick one. Are you serious? I can't split.
Yeah.
Like
I'll go with the chat too. I'm gonna put a poll in the chat.
Which one do you think has more upside from here?
Well, I think depending on your time, I think Jackson could in like 5 years be $300.
We're selling a course if that happens. The membership's ready. $2 you get your grandfathered price. Oh, game over.
Yeah, I mean, I really I saw the two-parter with what was it? The guy with the really funny name, Vague something.
Value Degen. You're talking about Value Degen.
Yeah. That's what I'm talking about. Yeah. Jackson was a big subject on there.
Yeah, that was the video that got me to indulge in Jackson, we'll say, and Andrew's little mysterious ways. Also, while Fabio thinks and debates, Jan was gifted a channel membership, so maybe we'll dance while Fabio thinks. We might have to put Fabio in timeout. He can think about the decision he made, but in the meantime,
it can be thinking music.
Yeah, thinking music.
Put me in timeout and dance.
Round two. Here we go. Do me a favor.
There we go.
All right. I'll say Jackson.
Okay.
Interesting. I only literally just started like a small like starter 2 or 3% thing into Dave just because it's everybody still seems to be saying how good it is.
Yeah.
Mm-hmm. Yeah.
Thanks, Andrew.
Yeah.
Andrew's responsible for this 10% pump that I saw the other day.
Now, just because it went up a lot, I'm trying not to let that dissuade me from from buying more. But like literally, I buy it and it just keeps pumping. It's like I don't have any time to accumulate.
Thanks, Andrew.
Because it was so mispriced. That's the thing. So the asset, when the asset is so mispriced like that and was not paid attention to, because there was genuinely just like lack of coverage due to the SPAC. So it's sort of like a rediscovered asset.
Interesting. Do you have like a kind of like a ballpark estimate for the like what would be like proper pricing of Dave?
Well, it really.
I'll let you get away with a range. 15.
Yeah. Well, no, I think like in about a couple years, if they actually increase the loan amounts that they can start servicing and then expand, be careful in how they expand, but expanding into different products that are adjacent for those same customers, they can increase monetization at a pretty healthy clip and probably get still like 30 to 40% CAGR off of their earnings there. And for the foreseeable future. And, something like with the current price, because they did a reverse stock split back in the day. So that's what's going to cause the dollar figure to be really high from when they first IPO'd from their SPAC, because people look back now and they're like, they weren't $10. Yeah, because they did a 32 for one. 500 plus is not outside of the question.
Interesting.
So if it's close to 400 in a year, you told me that that's where we're at in like a year from now, I wouldn't be surprised.
Interesting.
I'll take it for $15 a share. Next question. No, I think. Oh, I wanted to talk about High Tide while I have you here. Obviously, you're going to be on. You're kind of an honorary High Tide shareholder, even though you're not at this point. You sell out.
I'm an options shareholder.
You're not. Sorry.
My
bad.
He's long through options. That counts.
That's synthetic.
Yeah. What are your? Do you have any updated thoughts on High Tide? I think we kind of covered it. I may have asked in the comment section, but the Canadian consumer is not good right now.
Yeah, that was a concern I had like literally the very beginning of this year, right? And wow, look at that. No, I mean, Blake keeps tagging me when the numbers come out, and because I told him and I told all you guys, like, my KPI that I care about the most is the elite member growth.
Oh yeah, that's been great.
So if that keeps going, I think everything else will fall into place. But elite membership growth is what I care about the most. Store count growth. Good.
Yeah. And actually, I was kind of surprised how good the elite membership growth still was on the well, I think they were over they broke 100,000, I think, on that, which is pretty juicy.
Yeah.
And the Germany, which I can be pretty vague on, but yeah, Germany.
Yes. There's
could or could not happen.
Well, my understanding is we should expect some kind of a news item one way or another soon regarding something in Germany.
Yeah. Blake asks if any of us looked at Warrior Met Coal yet.
I have 100 shares, Blake.
Wow.
Yeah. And then it pumped like 13% in a day.
Oh, there you go.
Yeah, it's on my watch list. I'm looking at it very intently.
Fuck.
Yeah, I wish it had stayed down in the like low mid 40s a little bit longer, because I was actually thinking about doubling it, but I'll take it. It's doing okay so far. Yeah. Well, if it was like thermal coal, like they were burning it, like, I wouldn't be interested. But the fact that it's coking coal, I like that particular area, because it doesn't really have there's not really a good alternative for that. And
what about robotaxi?
Well, the thing is, you need a lot of steel to build your robotaxis.
Oh.
So it's actually robotaxis bullish for HCC. But I think there's a lot of potential infrastructure demand in parts of the world that have growing middle classes and that are actually starting to work on building better infrastructure. And of course, you do have things like robotaxi or whatever. A lot of different things in industrialization. It seems like there's a never-ending list of things that require steel, and if you want to make steel, you've got to have your coking coal. So,
yeah.
I've always wanted to have like a materials based thing in my portfolio, because at the end of the day, financial instruments and stuff can kind of do what they do, but an actual raw material for industry is always worth something, regardless of what like inflation is doing or whatever. If inflation goes crazy, well, then just the price of the commodity should go up, right? So it's good, interesting from that perspective.
We tickled Blake's pickle, and it appears.
Oh yeah, definitely. definitely like that.
We'll run for like 5 more minutes. So if anybody has any last comments, questions, or concerns for any of the three of us,
Well, what stocks from like we don't want to be accused of clickbait blocked. So
I was going to ask Fabio a good question about Miami, but remind me.
we haven't talked Amazon yet, and you did put that in the
Amazon.
In the post.
We were accused of clickbait. On you,
But you're blocked already. It's too late. You lost that guy.
True. But if anybody else is on the fence, we want to reel them back in.
Amazon, it's climbing higher, letting it do its thing. Next question.
No. Well, that's all you're going to do. Amazon?
It goes high. It goes high and it makes a lot of money.
Let Fiscal talk.
Let's be real with and like ask the real question everyone wants to know about Amazon. What's the best deal in the Magnificent Seven today, Amazon or Google? Because it's really between those two.
You want to know
I would say Amazon.
Honestly, if Amazon was still below 200, it would be Amazon. But I feel like at today's prices, it may very well be Google. But that depends on so many damn things. What say you?
I have been on, for obvious reasons, but I have been on the Amazon train for a while. They just generate such a good return on each investment, which is hard for most people to read it through their financials, because I get it. Like there's just so much to kind of shift through. But once you kind of make the adjustments that Jeff Bezos laid out, like in his letter back in the year 2000 on like how to look at Amazon, you start to realize just like how, insane of a business it is. But it's not to diss Google. Like Google would definitely fantastic company. We talked about it when I came on here with Dividend Dude, and you guys talked about it not too long ago in your Google deep dive, which was really good, by the way. You're picking between, two great businesses. So, but yeah, I think because Amazon has really clear growth prospects, that's what makes it, because everything value is relative. Like Google, if I'm being honest, like what growth do we think the overall, because a lot of what people are thinking about mostly is like maybe a re-rate, right? Because in terms of growth, we're not really putting out, 20% CAGR on Google, right?
Yeah.
At this point.
It's still growing. It's certainly more than Apple, right?
Yes.
But yeah, it's probably not as much growth as what Amazon, what I think Amazon will probably do. I think AWS is probably doing better than Google Cloud from what I've seen as far as the numbers they're putting up and everything. But Google Cloud is still growing pretty well. And I've heard Gemini, the growth is starting to take off there. I don't know about how well that's being monetized. I did hear that they were adding it as like a forced add-on to enterprise accounts or something, and that was generating some revenue from Gemini. So there is definitely still growth, but yeah, I think Amazon's probably maybe more growth.
Predictable.
Yeah.
It's because the ads business is going to be so powerful over time. Ads efficiencies, like, because any marginal efficiency they get in the retail business is actually a pretty big increase in profit.
Yeah, 1 or 2% gain there because of the revenue numbers are so damn high. It results in billions on the bottom line. It's absolutely bananas. I've actually looked at that and thought, wow, like if they just by like a couple percent, we would be printing. What I've seen a lot more of, actually, like I shop on Amazon a lot more than I used to now. Maybe it biased as a shareholder or something, I don't know. But I've noticed, I've started to like really take note when I am searching for something, the sponsored results, because they do show if it was like a sponsored result or the overall pick or whatever. And I am assuming companies that sell random widgets, they're willing to pay a pretty penny to be the in the top couple sponsored results on Amazon. Like that's worth a lot because we talked about this actually last time we talked about Google, that where the money is actually in the what they call the high intention searches. And if you're on Amazon, you're already looking to spend money. So those are by definition high intention searches. So very monetizable, I would imagine.
Yep. And they just partnered with Meta. So this Meta, which, okay, I say like Zuckerberg could surprise us all with the growth that's coming out of them. I talked to people on the other side of things as far as like ads guys go, and they keep telling me like Meta's algorithms are getting just better and better. They're seeing in the conversion rates, right? So they spend money and they get money out.
Yeah, and you and I talked about how like Instagram got us.
Yeah, we talked about that. I remember.
Yeah, it was, I think it was earlier this year. Like, yeah, Instagram got me. What we all had said, I think we pride ourselves on not really being super susceptible to ads in our.
I just had a hat recommended to me, and I saved it. I'm buying it probably.
Dude, you understand like how insane that is? Because but so Mark is actually pushing. I know I'm on a first name basis, you know.
I mean, you're personal friends now because you're an equity holder in his company.
Yeah, exactly. Like,
major
I call him up. I'm like, hey, motherfucker, that buyback's pretty small. Increase it. No, but on a real note, there, he's really pushing this like shopping experience on Meta.
The Meta whale has spoken. You need to increase the buyback.
Yeah. Well, maybe not. Well, I don't know. No. The thing is, like, it's all about relative. So FICO has been buying back stock like crazy, and you look at on a P ratio, and you're like, wow, that's stupid. They're buying back stock and it's super overvalued. But it's all about relativism. So on a relative basis to what FICO's earnings are going to grow, it actually might be a good idea to buy back stock. So really, I just don't. If I'm being honest, it comes out of it's probably bad, but it's out of laziness of myself, just because Meta is so large in my port. It's grown to such a large position that I'm not looking to buy more. Yeah. So I'm not looking to do the legwork to say like, oh yeah, this thing is, you know, insanely undervalued. I need to make it now double what it is now, because I'm not going to do that.
Do you sell covered calls on it at all?
Like, yeah, all the time.
Like out of them, yeah.
But right now I don't have
far out of the money though, right? Like you're not trying to get rid of the stock by any means, I would imagine.
Oh, I want to just address Dissector. You're only just now buying CLS.
Seeking Alpha told him it was a buy.
Okay, dude. Only just now you're buying CLS.
In the interest of not being clickbait, there's another topic I think that I've heard talked about on Discord mostly, but we've heard maybe the year of the REIT might be coming around the corner. I mean, is MPW finally going to have its day?
I don't know.
He doesn't know. Oh man, how
get Andrew to get on here and explain REITs, because he's the REIT master.
I wouldn't want to be accused of clickbait, and we did have that on there, but Stabulo says it's never having any day, and he used to be all in on the stock. So
it's
Anakin.
Okay, like, well, what catalyst are you waiting for?
I think we're waiting for the last bad tenant situation to more or less wrap up, which is Prospect, and I think we're almost there. Like Stewart obviously had its final like global settlement agreement way back when, and they had another tenant that was close to bankruptcy, and now that has started to work its way through the system, and we're waiting on they've signed a global settlement agreement, but it still hasn't like the auctions and things like that haven't happened. There's supposed to be like a debt waterfall where MPW collects all of this money on asset sales and stuff, and that just hasn't occurred yet. So I think we're waiting for those auctions to happen and that money to change hands, and then to see because this is supposed to be a thing where that happens, and then FFO recovers from here because the bad tenants are all gone, replaced by better operators, and they have a rent ramp up, etc. Their dividends 8 cents a share, and I think what shareholders are looking for is getting back to regrowing that dividend, because it came down from 29 cents a share down to 8 cents, and the price fell accordingly, right? But it does seem like they're going to sustain at the 8 cents at the very least, and we'll see if the FFO recovers and they're able to do that. But I think that's what everybody's looking for.
Yeah. So how much of their portfolio is like churning right now? What percentage of it going to this new, like a new tenant?
So with Prospect, it seems like the stuff is just going to be sold like outright, like real estate and opco, like all together as a package, and they get their money in like the debt waterfall for that. For Steward, whatever was left has basically all been transitioned to new tenants, and they're in their ramp up phase right now, because new operating companies had to be formed to basically take over the existing hospitals, many of which were in really bad shape, disarray, chaos, etc. And so they were given basically like a few months of no rent, and then they pay 50% and then 75% and then eventually 100%. And that ramps up over a period of time. It's slightly different for each one based on like what their need was to get the deal done at the time. So those rents ramping up should be accretive to FFO going forward. And then whatever comes from Prospect hopefully will be kind of like a windfall.
Yeah. And you have this other benefit because you guys have already seen or heard or participated in the discussions about, like what I'm doing with like the fixed income portion of my portfolio.
Yeah.
So like there is a broader macroeconomic backdrop that should benefit MPW. So, hey, for all you know, this whole pain train might be around the corner where you get that resolution. And then at the same time, you have this like broader rally in that asset class. Because people forget there was a period of time where actually looking back, REITs had outperformed the market handedly over a longer period of time. And then now that's sort of dwindled away because you've had now 5 years, a 5-year period of underperformance in one asset class. So now the asset class is left for dead. And I think universally, most REITs or the REIT space, it's trading under NAV, net asset value. And the presumption built into that is there's just not peak pessimism. I don't know what like level of pessimism we're at, but some deep rooted pessimism in the asset class that people just don't want, they have no faith in it. So tends to be, when it's time to get involved. So like you've been involved in this, like I said, pain train with MPW, and like it could be, you're right, ending, and then you're going to get heavily rewarded as two things happen. Both the broader effect and then the micro effect.
That's why I just sold all my Amazon and to put it into realty income right now. We are going to retire in the next 5 years.
I don't know about
I'll
that.
throw some SHG in there too.
I don't know about
last question before we get out of here. What is so special about Club 11 in Miami?
It never closes.
Okay. And when are the Castro Kings going to Miami to visit Club 11?
I don't know. Tell me. It never closes though. They only closed actually for the first time in their history during the COVID lockdowns.
Oh,
interesting.
Wow.
Fun story. I've been to Florida, but never Miami.
It's overrated.
It's overrated.
I could see Fabio being like 61 day with a nice 18-year-old girlfriend. I could see it. Got it. All those MP, all those meta shares. Oh, it's game over. He's got a yacht.
Yeah, the meta shares, they'll be like Berkshire. They'll be like $600,000 each. He'll be doing quite well.
Meta is $600,000 a share.
If only he does the buybacks like you keep telling him, he can get there.
No, you know who fumbled the bag so hard? BTI management. I'm telling you, those returns could have been otherworldly.
If they had really juiced it when it was like $30 or whatever. Yeah.
I would have totally rug pulled the dividend sluts and just said, oh, no more dividend. Let it sell off.
So do we think BTI, do you still have BTI at all? Or
I have it. So I have it in my income fund.
Okay.
And it's going to be part of that.
Yeah.
I'm going to be out Kemmer. You'll see. No, I'm not even joking. I'll Kemmer. Yeah. I'm pretty confident. People think that's going to be a Jerome Powell fund, but it's not.
I've actually been thinking with some of the stuff that's being like TSSI, we get like a big 150% gain or something. I've been thinking about hey, anytime we get one of these giant wins, maybe a portion of that goes into like a separate basket of stuff that's more income focused. Because I'm the old man here. I got to start thinking about the future.
Let's go. We're going all into realty income. I just said it 5 minutes ago. We're doing it.
Yeah, but that is something that's been on my mind. And hey, if rates go down and certain things happen, maybe we'll reach a point where those income stocks actually beat the market. That hasn't been the case lately, but maybe they will.
If they are beating the market, that's because we're in not a dead, but a lost decade, which would be you'd be hell yeah, portfolio giving you a good rate of return. No, but okay, so this is I guess going to be boring for a lot of people, but right now we had a weird event where interest rates got really low. A lot of corporates issued a lot of debt, prefs in particular. So you have an opportunity to lock in a lot of good debt out there that's probably never going to be redeemed. I know for some people it's that's insane. No, but depending on the purpose of your investment, because one of the worst things that can happen to you as a fixed income person is the reinvestment risk phenomena, which is you invested in this asset for those reasons, that return profile, and then it gets redeemed. And now the reinvestment risk is just simply the risk that you now have this capital, you have to redeploy it somewhere and the same opportunities don't exist. So that's what's the problem. People don't think about that. It's a risk that's there, but no one thinks about reinvestment risk. So it's not the same kind of risk that, the delinquency risk, all that stuff, duration risk. People usually think about those, but reinvestment risk is usually ignored.
Yeah.
But there's a lot of stuff out there. You can get pretty reliable between 7 to 10% yield right now, just due to the interest rate environment that we're in, and probably that's never going to get redeemed from vintages from 2021. So,
all right. I have one last one. What we talked about recently, but what are some BDCs that just maybe are in the bullpen, under consideration?
Oh, the two, they're actually popular, but they're very good. They genuinely are. And that's Main Street and Hercules.
Interesting.
So, but
I've heard of both. They're famous.
Yeah. They're popular, but for good reason. They actually are pretty good. Not pretty good, really good. They just so happen to have both outperformed the market. Do they both do monthly? I know some people are obsessed with the monthly. No. Hercules is quarterly. Main Street's monthly.
Yeah. Main is the one that they always compare to realty income for some reason. Yeah, because they both play monthly, so let's compare them all the time. Have you heard of ARCC?
Yeah, Aries.
Yeah. Are they any good? I used to have some.
They're good for a externally managed BDC, but that's the key. For an externally managed. They will.
Now, are they managed by the other Aries? Because there is another. Okay, yes. So Aries manages Aries.
Yes, because if you buy ARES,
yeah,
they are the asset manager. They generate the fee income. That's a very attractive form of income because it's almost like software income, or it's like subscription income because you're managing as a percentage of the assets, and then
they get their fee no matter what.
Exactly.
Yeah, but okay. So all right, that's interesting.
Yeah. And then ARCC is their public vehicle for BDCs. And then that's for a BDC. So that's like one way to play the return profile of their private credit portfolio. But Main Street is internally managed, and you'll actually see like the returns speak for themselves. Internally managed tends to be better, but ARCC is very good for an externally managed. They're very good.
And Hercules and Main are both internally managed, aren't they?
Yeah, they're both internal. So the management team is the management team of the company. You don't have this management team that's taking fees like that. No.
And Hercules, the ticker is HTGC, right?
Correct. Yep.
Okay, cool. All right. Yeah, I've been thinking about getting back into BDCs a little bit.
Yeah, it's a different. So they're completely different asset class. They're not included in any indexes. So arguably they've been mispriced for a long time at this point. Especially the internally managed ones. That likely has a lot to do with why they've had periods where they outperform a lot because they get severely mispriced because there's just not a lot of participation. The reason for that lack of participation in any index and why that won't change anytime soon is because the current regulation requires that the index or any ETF that includes them has to include their cost of capital as part of their expense ratio, and that hurts marketing. That hurts the marketability of the ETF. Wow. So you tend to not see them in these products. So like if you look at the market cap weighted ETF for BDCs, which is actually a bad product, I'll explain in a second why. That one is effectively like the expense ratio. If you look at it, looks really high. It's not actually that expense ratio. It's because they have to include the cost of capital, which is basically the equivalent of the cost of goods sold for a BDC, because a BDC is kind of like a bank where they borrow money and then they lend it out. So the cost of capital is the cost of the products. You don't include the cost of the products as an expense, right? An expense ratio. But just the regulation hasn't, I don't think, done it justice. Maybe one day it changes. And if it does change, you actually could see some sort of change in the premium on BDCs. Like BDCs could then, you would actually see an uplift in valuation.
Yeah, it seems like maybe like the regulation is like antiquated compared to the actual function of what BDCs actually do.
Mm-hmm.
Yeah.
Yeah. And it's something that hurts. It's not a regulation that hurts their business model. It's just a regulation on like reporting that caused this. So,
well, hey, maybe they'll catch up with the times.
Just buy Vici. Why do you got to overcomplicate everything?
Buy Vici.
Buy Vici. Be like Joseph Carlson. Wait, no, he sold.
Yeah, be like me. Buy Vici.
If Joseph Carlson sold, it's obviously a buy.
Joseph Carlson bought something recently. He was considering buying Evolution. So that's somebody recommended it to him, and Seymour Duck told me
it is. I mean, it does fit.
I know, not good.
His stated criteria. It's not as though they're bad because he likes high quality recurring revenue, yada yada yada.
Well, it's down. That's the issue.
Yeah, and he likes he does, and I know I don't think he says it outright, but he does like momentum. I think that's a fact.
I like Evolution quite a bit. I mean, you guys have seen it's grown.
I'm honestly like that's one because it hasn't really taken off a lot, so it's still pretty well priced to where I could add more because I do have that cash from TSSI, you know.
Mm-hmm, mm-hmm.
Yeah, it's in the bullpen. Like I'm spoiled for choices because there's Jackson, there's Dave, there's Evolution. Like there's so many.
Split it into a piece of pie.
So many good deals out there.
Yeah.
8K.
Yeah, there's so many opportunities still, even though the market's kind of hitting those new highs. I'm still finding opportunities.
Well, a lot of these opportunities I don't think are even big enough to be in, like the companies themselves aren't big enough to be in the S&P 500, so nobody's really heard of them, and that's why they're so juicy.
Yeah, that's probably it. Yeah.
I mean, don't even get me started on my like really small caps that I've got.
Yeah. No, please, because I need you to pump one. Yeah, that was our unspoken.
Oh, right. So have I told you about IntelliCheck?
Oh no!
Please tell me more.
So IntelliCheck, They prevent fraud.
Mhm.
And they're starting to do it now for some very big clients like Truist Bank.
Mm.
Ooh.
This contract is worth millions of dollars, and they have 90% gross margins. It's
What's the ticker for the audience?
It's IGN for IntelliCheck. Yes. You could say that I have some shares and some possibly degenerate calls in the stock. I'm a believer. I do think it has echoes of TSSI a little bit because of the fact that it is it's sort of, I think, poised to very rapidly grow their earnings per share over the next couple quarters in a very substantial and rapid way because they're bringing on new substantial business and their gross margins are so high. And they've already said, they've clearly stated that in order to bring on and implement with new customers, they don't have to increase overhead to do this. So as long as they've overcome their overhead already, additional revenue mostly should hit their profitability via like what their gross margins are. So it should be very, very good. Very, very delicious. And there's rumors. These are just rumors, by the way. A lot of people are saying it that they may be working with a very large social media company to do some identity verification with
As long
them.
as it's not Snapchat.
Could you imagine it being Snapchat?
Bad luck.
I don't think it's Snapchat. At least that's not. I haven't heard that.
We don't even know the company. That's the funniest part. Like I feel like Fabio, we're saying it like all these anonymous terms. We're being very vague. It's large
very vague.
social media
Listen.
company. We don't know who it is.
Listen,
That's all
I've
right.
heard it suggested that it might be one of the Meta subsidiaries, like
yeah.
it might be Facebook or Instagram or something.
They got
there's-
Goldman. They got Goldman Sachs recently.
Oh yeah,
Yeah,
like,
they mentioned like basically all the characteristics of Goldman Sachs. Since Goldman Sachs, Stabula was the one who found it. It was like it has 1.7 trillion in assets. One of the top 5 banks, 1.7 trillion in assets. Blah, blah, blah. It's everything Goldman Sachs in terms of stats.
Yeah. All right. I hadn't sussed that out. I only knew because I think they named Truist and they so they probably have Goldman Sachs then, huh?
That's one of the new ones they just got. Yeah.
Yeah. Which, by the way, I also think it's worth pointing out. It seems like for larger customers, there is like a pretty decent lead time before like the stuff gets fully implemented and they start actually showing the revenue from it. So it's exciting when they sign a new customer, but don't expect to see all that money right away in the same quarter where they tell you that they're bringing on the customer. It might take some time to play out, but should be worth it because a lot of their business previously has been smaller retail customers, and these bigger ones are millions and millions of dollars, where those smaller ones were just little drops in a bucket. Basically, these are like additional buckets in and of themselves.
Yeah.
Oh, Sabula's got a lot. He's got a lot to say on this topic.
Well, I'm ready. I'm ready for the moon. I'm
ready for the moon. Also, it would be nice if it would like 10x for me next week.
Should I start a nice little small holding Fiscal?
I mean, it's entirely up to you. But
CFK
did you ever get any TSSI, Ryan?
No, I never did.
If you don't want to miss the next moon,
not financial advice, by the way. Not
financial advice, but if you don't want to miss the next moon, I mean,
I understand 10x is for everybody. It's fine.
I mean, if you want to miss out again, don't buy. Okay.
At that point, that's mask off. You don't.
I'm doing it, everybody.
Don't buy it.
If you hate printing tendies, by all means.
Okay, I understand. Being rich isn't for everybody. It's not a lifestyle.
If you want to be middle class forever, by all means, don't buy it.
Yeah.
Yeah. So it's looking pretty saucy, and it just they're saying all of the right things. That's music to my ears. For something that, wow, like it's good, but like still flying under the radar, and that's why I like it. It had a little bit of a run up in the recent past, but I really don't think some of these bigger customers, if we're thinking about the dollar amounts instead of everything in the right way, I don't think that they're actually priced in yet. I just don't think there's any way, because we were looking at the size of the Truist deal, and if they really have this mystery social media company and Goldman Sachs, it should, like, if it's proportional to the, like, if like, I don't know, how big is Truist compared to Goldman?
In terms of asset size, I think they're close to half. They should be just over $1 trillion, I think.
So, like, if we say that Goldman is to some degree, like, at least the same, if not maybe a little bigger than Truist, that would be an enormous contract for what the size of IDN is, because this is it's a very small market cap. So when we talk about these deals being a few $1 million, this is $100 million market cap with 20 million revenue. So if they're talking about a contract that's, $5, $6, $7 million compared to their 20 million in annual revenue, these are gigantic, like I said, buckets compared to most of their smaller retail customers, which are drops.
Yeah. All right. So should I buy Dave or IDN?
Dave is more of a clear shot, man.
Okay.
This is, like, I would still say IDN, like, is somewhat speculative, because, like, the earnings haven't really, like, started to show up. I think with Dave, you already see what they can generate, and, like, a much clearer path. It's just, I do think Dave, it's probably a little bit more priced in because they've already had, but not fully, but Dave is probably closer to its fair value, but because it's a little bit more certain, nothing is certain, but a higher degree of certainty.
Yeah. Andrew's fault. We've been going for an hour 33.
As Blake says, yes, Dave's just loan sharking. So if you want to, if you ever wanted to invest in Tony Soprano, buy Dave.
Okay. And mine then.
If you don't pay, then he'll send Furio to your to your apartment.
Oh, Furio.
Okay, wait, but do you guys know? Did Andrew tell you guys what happened? Because the story is hilarious. I actually said that to a guy on Twitter. He never responded back.
No.
Because so the government did government things and was protecting consumer. It was consumer protection maxing, and they basically made Dave change their business model to be very unfavorable to the consumer, much more unfavorable than it was before, but very favorable to the shareholder. But the end demand didn't change because people need the product. So one thing is certain, people need the product. Before, there was a way, as long as you were a responsible person that could schedule things, right? That's like literally the threshold. It's like, could you schedule? If you could schedule, you could pay Dave $0 before. It was possible. And you would get a loan for this much money that you'd pay. Right. As long as you could schedule ahead of time.
Similar to how, like, if you actually pay your statement balance on time, your full statement balance on your credit, you don't actually end up paying any interest.
And you get free money.
But what they count on is a certain portion of people don't do that. And it sounds to me like Dave was operating kind of under a similar assumption that you could get it paid before you get charged, but most people, or some significant portion of people, would miss the mark and would end up having to pay.
It was worse than that. They charge you if you want your money early. So they'll say, okay, you get your loan, you'll get it in 2 business days. It's like, no, but I need it now. I can't wait 2 business days. I scheduled it to come. I only went in the app today, or the website today, and I knew I needed it a week ago or whatever, or, some sort of cadence, because a lot of them are repeat customers. That's the thing. And so they'll just say, okay, no, but I need it now, today. And then so Dave will charge you for that immediate deposit, right? And then the other part was like, okay, you could tip them. Then there was like, the complaint was it was set standard to tip. And that was like,
I do remember hearing about the tipping thing.
But I mean, like, well, for the shareholders, you're just like, fuck yeah, they got rid of the tipping. Because when they got rid of the tipping, all the people that, again, because it wasn't a very difficult thing to navigate away from, right? Because when we were looking at it, it's like it wasn't hard. Basically, the government was genuinely saying those people are just like mentally incapable, like really dumb. They're basically calling them dumb, insulting them in the worst way possible by saying that they're not capable of navigating out of the tipping function.
Like they can't figure out how not to.
Yeah, like wow, that's really dark, in terms of what you have to accept about those people, instead of just assuming that that they're capable people, right? So the tipping function going away was really good because the monetization skyrocketed like crazy. And then that business model change, that's what you're seeing in the price just going up and to the right in the stock. That they changed the business model. It's a completely different business than it was a year ago. That's what people don't understand. You don't like the reason why it's still cheap is that the growth right now that's happening, you looking at the company 2 quarters ago is not equivalent to what it is right now. They only have 1 quarter. And what there was like this concern / worry, it's like, oh, they got rid of the tipping, like what's going to happen? It's like, no, turns out the monetization's like going through the roof now because the government was not actually looking out for the consumer. They were secretly looking out for us, the shareholders.
Are we saying that that's because of getting rid of the tipping and changing it around, that's what's driving there? Okay.
Yes. So it's that you have to pay.
So I suppose there could potentially be a different way to interpret it, and that is maybe because the economy maybe isn't so good, more people need the Dave product, and maybe that's why.
You would have seen like a massive increase in the user base if you're trying.
Okay, so the user base is similar, or
no, it's growing still.
All right, growing, but like at the like expected level, not like higher than expected.
Yeah, it's not.
Okay, I gotcha. Yeah. Okay.
It's monetization, like how much money they're making per user that just went up like crazy. And then now each new user, it increases their payback period. It increases everything. So it's all one big, beautiful bill, some might say.
What a way to bring it full circle.
That's enough. We're closing out after the big. I've been describing everything as big and beautiful lately.
So I guess to Lincoln's question, I guess the answer is
yeah.
It's still pretty reasonable, even though it's already up a lot.
Yeah.
Yeah.
We're really just trying to pump our bags, to be honest.
Well, I just got in today. Like I have the tiniest little amount. And I'm trying to get in before it actually does hit like 400 or whatever.
Yeah. Jokes aside, Andrew, if he was here, and I'm just echoing him here, he thinks it's still very cheap.
Although, it did pull back to 190 a few weeks ago, right?
And he went deep into it.
So it's pretty volatile. It could have a pullback, right? Potentially, like if you're looking for like a strategic entry, but I wouldn't necessarily count on it either.
Entry.
I don't think it's gonna ever get down to like the Andrew's cost basis, my cost basis, or anything like that.
Isn't his cost basis like 70 or something stupid like that though?
Yeah.
Oh
yeah, lucky bastard. But yeah, no, I think that ship has sailed. But it's like 270 or something right now. Like I could see it going back to like 230 or something. Yeah.
Oh, dude, 230 is a nothing burger pullback. It's 281 right now.
Yeah. Which for me though, I think I'm just gonna keep adding. Like I'll add more if there's like ever. I'll like go a little harder if there's ever a dip to get my basis down, and just try to build out a position, I guess.
Okay, well, not to hype it up way too much, but like they're pretty much a cash printing machine. So there's not really. I'm being serious because there's not really anything they need to reinvest into, which is pretty amazing. Like the scale here is insane. So all this cash they're going to be making, I don't know what they're going to end up doing with it, but they already initiated a buyback program when they were in the 70s. At the time, it was a significant percentage. They initiated a $50 million buyback program. Now that's a nothing. Well, it's not nothing, but it's not as powerful as it once was. But I can't imagine that they're not going to continue to do a lot of capital returns. And
if they don't have to spend a lot to grow, then what better thing to do with the money than just some buybacks, right?
Yeah, and if the management thinks that they're going to grow a lot, right? Which this year the guidance is sandbagged. It's totally sandbagged. I think Andrew already went through with you guys the numbers. Like those numbers are not what they're going to hit. It's not. It is very, very, very unlikely that they do not surpass those numbers. So if you're management and you're in this position, probably
I
buybacks.
think maybe answer Cody's.
Cody has a good question. Yeah, why is there so much insider selling?
I have an idea of why, because it's like run up so much, and that's part of their.
Oh yeah, that's why the CEO was. Yeah, that's what Andrew told us. The CEO, he's seen it go to the ship box before, and he wants to at least get something while it's here.
Yeah. And I'll add this. Did you guys know that before Nvidia 10x, there was a lot of insider selling?
Yeah, that doesn't surprise me, because especially if you're looking at like the C-suite, and a lot of their compensation is coming from stock. Any major purchase or anything they want to make, like that's the easiest thing for them to get, like to free up a down payment for a new house, like whatever it is, like that's the easiest place for them to do that. It doesn't necessarily mean anything. I might be encouraged if I see a lot of insider buying of a company, but I don't read too much into insider selling unless it's like all of them completely emptying it out.
Yeah. If they're emptying their position, like that one guy did, I forget that media company, the one that owns like the, I think it's Charter. He liquidated his portfolio of the stock.
Yeah.
But you're right.
But yeah,
it's when they buy. That's when you pay attention. Not when they
right.
sell.
Yeah. That's how I've started to look at it. Because my other very small cap cannabis company, the CEO recently bought like $100K worth of stock, and then it had like a little mini pump because
Disgusting.
there's been some decent developments with it, and it is still cheap if you consider the just on like a PE basis. It's like a 6 forward PE or something. So
do you know who's been buying a lot of their own stock? It's
like
newer
doing
mine.
Evolution.
No. Well, yes, that one too.
Yeah.
That one we all own together, but
yeah.
LVMH.
Oh, interesting.
Bernard Arnault has been buying quite aggressively over the past month or so. I'm already green on the position. Didn't really take long, but we'll see where it goes from here. But no, he's been.
Whenabouts did you get into LVMH?
Like within the last month.
Yeah, let's pay attention to the portfolio updates tab, Fiscal.
I'm gonna crash out on you.
Yeah. No, I've been
Your $80 membership is worth that if you look.
I talk to a lot of people, and sometimes remembering exactly who got into what is a little bit tough to keep track of. Okay, sometimes I have trouble remembering when I got into things. Okay,
like I own that. What?
Yeah. But no, I have been hearing some talk for a while that it was, although I think I first started hearing that it was cheap like a year ago when it was way more expensive. So now it may actually be cheap. It's interesting. So with LVMH, is there any actual growth for them?
Yeah. Like I think that their longer term growth rate is going to teeter around low double digits, and then
that's still solid.
Yeah, it's still solid.
Yeah, I could definitely see that justifying the current price. Now, is that one one of the is that in the income, or is it like just in the regular?
No, it's in the regular.
Yeah,
it's in the regular.
I would guess 2.5% dividend doesn't qualify it for the income fund.
No. It could be in the income fund, but the income fund is more going to be focused on more low vol, uncorrelated, or less correlated. So
gotcha.
lower correlation, lower volatility.
Right. So that would be like you have REITs in there, for example, and not something like LVMH.
Yeah. And also that it's attractive that right now REITs are set up nicely.
Yeah.
They're going to be tied to where rates go. And
well,
rates
gosh, I might have to take a closer look at LVMH now. I do like the idea that I guess like because they associate that with luxury, right? And there is this idea that luxury stuff can be a little bit defensive in terms of like if the economy is bad, the kind of people buying this stuff won't care so much if the economy is bad for a little while, and it won't really necessarily hurt them so much. A similar case to why somebody might think like a Ferrari or something is recession proof, because like, hey, if you're rich enough to buy a Ferrari, you probably don't care if the economy's bad.
Yeah, I would say Hermes is probably better than them in that case, because like Hermes is so powerful that you'll have the okay. So you guys know that the I forgot what the guy's name was, but the wife of the guy, the leader of Hamas, his wife was seen running away from the scene with the Birkin. So, it's like, it's something so powerful that the leadership, for example, in North Korea, their kids will be, rocking Hermes, right? It doesn't matter. It outlives everything. It outlives politics. You can be in the midst of a socialist dictatorship, and the leadership will be the leadership kids. They'll be your customers. The leadership themselves will be your customers. It doesn't really matter. So it's something else. It truly transcends, the whole what's going on in the economy. But Hermes fits that bucket more than LVMH. LVMH does not. They're more going to be for that upper middle class. So if you think the world's going to prosper more, if you think the world's going to get richer over a longer period of time, LVMH is a great play to capture that, because most of
more like the doctor lawyer that's keeping up with the Joneses next door for LVMH. That's like kind of the
so yeah, it's like because Hermes is they'll be very mean to you if you try to buy a certain, not mean to you, but if you go try to buy a certain product, you can't get it. You can't get allocation to it. You gotta have already, some history with them. LVMH, or in some of their brands, not all of their brands, some of their brands, you have the money, you can just buy it tomorrow. It's whatever. So, but they treat it at least a little bit nicer than some of the other quote unquote.
That's very interesting things going on in the chat right now.
I don't know who he's talking to. I respect it though.
Are
they talking?
Who could it be?
Oh yeah, who? I hope it's. I don't think it's Retire, is it? I think we know if it's Retire.
Hennessy.
Yeah, it might be. It might be Retire.
That's Retire. That's Retire.
Yeah, I missed him. He has a new name. The popcorn monger.
Who's? Oh,
Retire on Dividends. Episode. He's a veteran.
Yeah.
Very interesting fellow.
Yeah, that might be time to head out of here. We do have 206 people in though from Twitter and YouTube. So thank you to everybody watching. Fabio, obviously, where can the people find you on Capital Mindset?
And your servers. Yeah.
Oh yeah, and our servers. I would vouch that Capital Mindset's a very good investment. Good $85 that we pay because we're close friends and family, and we get a discount. And we get all of his picks, and I think we're undefeated.
So
we don't lose money.
Yeah. If you're serious enough to commit the time, though, that's the important thing. Like you actually.
Oh yeah, you gotta like watch the icons too. Like I've been trying to make an effort to do that.
I think that's like if you want to just like get the buy and sell alerts. There's other places you can go for that. But if you actually want to learn things, then that's where I would recommend you go. If you actually want to not just the what, but the why and the how.
I've been watching Jeremy Lefebvre videos, and those have been really.
You'll learn more than you would in anybody's $760 mastermind. It's 60% off, but only if you buy it in the next hour.
Yeah.
So compliment.
Yeah, you're logging off here. If you want more of us, I don't know, buy the $2 channel memberships on top of Capital Mindset, and you get days worth of content. You have exclusive episodes with Blake. You get member deep dives. You got tons of stuff.
And you'll hear about things that we don't always.
We have.
There is a mystery stock that I don't talk about on the show. I may bring it up soon, but I have one stock that's a little bit secret. Only people on Discord or channel members know about it.
For $2, we could pump a stock that's 5 cents.
Exactly.
The ultimate value. But appreciate everybody for tuning in. Thank you all for support. Smash like button, subscribe. Check out Capital Mindset. Do dividend stocks, out drugs, and of course, cash flow is king. Oh, yeah.